Welcome back everyone. So today we're going to be looking at the company named Boohoo. They're a UK based company and we're going to look into whether or not they are a viable investment. And there's also a high possibility that in the future drivers will be charged per mile, given that there's more and more electric vehicles on the roads these days. So we're also going to be taking a look at that as well. So for those unaware, Boohoo is a UK company which is headquartered in Manchester. Boohoo is a company that sells their own brand clothing, shoes, accessories, and beauty products targeted to the 16 to 40-year-olds. They've been in operation since 2006, and the company is founded by Mahmud Kamani and Carol Kane. And so there's no retail stores, it's online only. And interestingly, we have Boohoo that also owns a stake in Pretty Little Theme brand, and that is owned by Kamani's son. Now, several months ago, there was a lot of negative news surrounding this company, and that was because factory workers were being underpaid with no protection from COVID. Now, the firm has stated that this type of behaviour is unacceptable, but I guess I would argue that it's quite bad for a firm not to be aware whether or not such practices are taking place or not within their supply chain. Now, Boohoo has only 40% of the clothes made in the UK currently. To date, they've used third parties to actually manufacture the items. So due to these issues, Boohoo is planning on building their own factory that will obviously speed up the process from items being delivered to customers, but it also gives them oversight into the manufacturing processes. So from a company standpoint, there are some positives to take away. We can see that there are some active plans in place, but this definitely had a lasting negative impact. Companies such as Next, ASOS, and Zalando have all dropped the company. And so as a result, we can see how the market had been impacted from all this news. We had the issues with COVID affecting the markets back in March. And then when this news hit back in July, the price was around £2.61. And to date, we're on £3.13. So is this a company that's worth our investment? Well, let's take a look at the financials here. So for the last 4 years, it's good to see that every year the earnings have been positive. We had 24.46 million in 2017, 35.36 million in 2018, 43.58 million in 2019, and 63.67 million in 2020. So from a financial perspective, the numbers keep on growing. Their business model is definitely working well for them. They obviously don't have the retail-based costs, given that they are online only. The analysts predict a price target of around £3.40 per share. Currently, we're situated quite high at £3.14. And then on the low end, we're looking at £1.60. Now, the company has a PE ratio of 47. That's pretty high in the fashion retail space. For me right now, there appears to be a high chance that the stock price will decrease. There's very little upside, and so I do suspect a drop in the market price. Some of the long-term questions we have is whether or not the company will be impacted by the issues of low pay and poor working conditions. As an investor, you have to decide if you are happy with the company and you support their long-term approaches. So right now, I haven't invested in this company. It's one to add to the watch list in my views. I think fundamentally they do have a nice exposure, and to date I haven't invested in a company that focuses on online retail. I definitely want to try and take a positive approach to this company though. They appear to be heading in the right direction. So let me know what you all think. Is this a company that you would happily invest in, or has the damage already been done? So let me know in the comments below. Now, the UK is planning on phasing out sales of new petrol and diesel cars by 2030, and so it's governmental policy to transition to electric-based vehicles. The issue here, from a government standpoint, is that a lot of the taxes that are made year on year from the sale of petrol and diesel is no longer going to be met. So currently there exists VAT on the selling of fuel each year that equates to around 28 billion, which is 1.3% of national income. So in the future, there's going to be this void of several billions every single year when everyone is driving their electric vehicles. Now, this idea existed in the past, and so we had the likes of Tony Blair abandoning the idea, which was to charge a maximum of £1.50 per mile. And it was a decision easily abandoned. VAT was still applied when buying the petrol and diesel. So given this won't be the case in 10 years' time or so, the current Chancellor of Exchequer is opening to the idea of a national road pricing scheme. So we have the actual figures here. 1 litre of petrol or diesel, that equates to around 68 pence in fuel duty. And so the government is going to be looking at any way to maintain this amount of money Now, back in 2017, there were a couple of ideas floating around, which was to provide an allowance of up to 3,000 miles every year, or equally for those in rural areas that have to commute much further, then potentially they would be exempt from such a policy. My views here is that it's not a great policy overall. For sure, money will be lost, but it's no longer possible to argue the environmental case, given that the majority of electric-based vehicles are either going to be charged at a charging point, and let's just say if it's a Tesla vehicle, then it's solar powered, then the pool is maintaining that electricity from its solar panel. But equally, the electricity that powers your vehicle could be from other renewable resources, or they might be from non-renewable resources. In either case, you're still paying for that electricity, and the companies that handle the electricity, such as National Grid, will factor those costs. But from the government's perspective, it's a large amount of money that they no longer have their hands on. And so given you can't apply the environmental argument in this case, it does make very little sense to introduce a system that charges drivers by the mile just because the government is missing out on billions of pounds that they otherwise would have made if they continued to sell vehicles that were powered by petrol or diesel. So we are yet to see how this idea will materialize in the future. It's highly probable that the cost will be variable, so if there's certain cities, then that cost per mile would increase and then other areas would cost less. But being hit by £1.50 every mile is going to add up significantly, even if it's at the low end of the spectrum, let's just say 10 pence per mile. It's no longer going to be cost effective for individuals to use their electric vehicle, and this will be problematic for the likes of Ocado, which have their fleet of vehicles that deliver goods to the doorstep, and so it's only going to have a knock-on effect on prices. So I really can't see how this policy would be favoured by the public. I'm curious to hear what you all think, so let me know if you think that charging per mile could ever work. So thanks for watching, everyone. New videos at 3:30 PM GMT every Friday. If you're interested in this type of content, then do consider subscribing. So if you have any thoughts, then do drop them down in the comment section below. It's always fun to respond to you all. And so with that said, I'll catch you in the next one.
Love me on socials. Say go and teetotal, ducking them phone calls, being more vocal. Love it when the UK boy goes global. Guys at your disposal say you weren't noble. Girl, you ain't no fool. Now the way you do it is so cool. Baby, I'm local, changed from a friend to a lover. Matching the easy wave runners. We've all had fake lovers. It's full like 500 days in the summer. CD, KSI, since 19 I've been seeing signs. This is God's plan, it's all God design. But if it ain't love, I ain't wasting time. I'm out.